Next, may we invite Chair of the panel discussion, Ms. Maureen DeRoy, on stage, please. We will now begin the first panel discussion on navigating the global uncertainty from financial institutions' perspectives, which will be chaired by Ms. Maureen DeRoy, Chief Executive Officer, the Executive Forum Singapore. The panelists for this session are Mr. James Cheo and Mr. Teo Chin Ke. Ms. DeRoy, Mr. Cheo, and Mr. Teo, please.
Thank you for the introduction. And James and Chin Ke, what excellent presentations. Macro and a real view on local currency bonds, which is was not really something I thought about before, because I am in Asian bonds, but not in local currency. So I'd love to explore more. But maybe, James, first to go to you. Debt. We've seen increasing debt in some countries. Do you think this uneven distribution of debt could lead to potential economic instability? And in addition to that, and we talked a little bit about that beforehand, there's this school of thought that says, don't worry about the debt, do more and more and more liquidity, new money theory. What are your thoughts on that?
Debt. The thing about debt is that some people can raise the debt and get away with it. Most people can't. And you know, probably only America can raise the debt and get away with it, and people would still be investing and buying American debt. But the rest of the countries, like what Chin Ke talked about, especially in Asia, we learned the hard lesson, too much debt in the Asian financial crisis. And we had to go through deleveraging before investors start to be confident in the region. And it takes years and very painful lessons. So I think in terms of debt increase, I think if you look at the trajectory, it's likely that I think America can continue this trend. They will likely to be still in deficit, 4%, 5%, 6% deficits, debt to GDP increasing because of that superpower that everyone would want, US dollar debt, especially those that are issued by US Treasury. So I think that trend would still continue easily. Well, in the next few years, there might be from time to time questions on fiscal sustainability for the US that could cause some volatility. But I think by and large, because the rules or the system is still very much a US dollar-based one, so I don't think that's going to be dethroned anytime soon. So I think from that perspective, you will see a sort of a kind of bifurcation of sorts where concentration of debt, particularly in US, but again, some countries in Asia would be having lower debt, but they will be a bit more healthier.
Thank you. And this is a very interactive forum, so please start thinking of questions. But Chin Ke, on the local currency bonds, it looks very promising in countries like the Philippines. We were talking about it before. And I think I was just there, and even the close friends of Marcus Jr. are surprised how well he's doing, and the people he is putting him around it. US, of course, likes the Philippines now, and yet we see foreign direct investments. It is there, but it's not really happening because the ease of doing business is still very difficult. So does that impact the local bonds as well? Or is this more a matter of, fiscally disciplined, demographic dividend, which is still only making money outside of the country mostly? So what is your thought on the Philippines?
I just heard a rumble. So Philippines is an interesting market. It's a market which, if you kind of rewind back to the 60s and 70s, that's when various global institutions were setting up there, right? You have ADB, for example, over there. Great institutions such as Asian Institute of Management, establishing themselves in Philippines. The level of optimism, right? If you were to rewind back and you look, at pre-1960, for example, and any global investor were to put a bet. If you look at Philippines, you have a large English-educated population, right? You have growing economy, good demographic dividend. You wouldn't bet on Singapore, right? You would bet on other countries in the region. And yet, of course, whatever happened, and Philippines is still very well on its way. So as investors in the Philippines, fiscal is one. We have to look out for that, right? But fiscal is also tied directly, or rather as investors, into FX. How does FX perform? Because if you buy a local currency bond, if you were to buy it in US dollars, right, the sovereign bond, I mean, that's okay, right? Because they will have to find a way to pay the dollar bond back. But for the local currency bond, in theory, you can either devalue your bonds away or you could inflate the debt away, right? If you let inflation run amok at 20, 30, 40% as an example, and let your currency devalue 200-300%, you can pay off your debt easily, right, in local currencies. But why haven't countries done that? That's easy to say. Why haven't they done that? They could do it, right? And once every few years, certain politicians come into power in the region, and kind of threaten to move towards that model, and yet they don't do it because like it or not, they still rely on investors, right? Foreign investors. A lot of painful memories from 97, 98 when various countries had to sign restructuring packages with IMF and all that. Nobody wants that to happen. That's terrible, right? It shows a lack of agency. So even though that is important, I think a lot of countries in the region would still, place a very strong amount of emphasis on fiscal, right? I mean, you can't just go bananas and, fritter your coffers away. And that gives me a lot of confidence in the region because I don't see politicians and governments do that, right? I think people generally want to do a good job.
Thank you. Just raise your hand if you have a question. Oh, Chris?
James, thank you for forever muddying the waters with the AI acronym. It means that means my question now I'm going to have to use the real words otherwise it becomes too complicated. I don't have a good sense of the demographic developments in India, which you could consider positive, but with the rise of artificial intelligence, to what degree do we have potentially a problem of a huge burgeoning population and not enough jobs? Artificial intelligence literally taking the opportunities away from a large growing population.
Well, thanks for that question. I think on the demographics of India, India's population right now, it's around 1.4 billion. And the thing about India and very much ASEAN, it's that the potential growth is very strong. India's potential growth 7-8%, but largely due to the growth of the labor force, and that's to do with because of its strong demographics. But if you were to combine the element of productivity, and that productivity could easily come from AI, 7-8% could become 8-9%, depending on how well the society uses AI. And I think countries like India, countries like Philippines, with a very strong kind of a population of English-speaking population, I think they could potentially benefit more. And think of it, a lot of the exports, even in India and Philippines, are largely service exports. So it's really essentially knowledge workers plug into the global economy, whether they are accountants, whether they are providing a query and IT support. And I think a lot can be improved by artificial intelligence. For instance, if they are armed with an AI so they could actually become much, much better at what they're doing. So I'm quite optimistic in the sense that they can actually increase their growth even stronger than the current projections of 7, 8, or even 9% in the years ahead if they can tap this power of AI. And right now, given the developments that we're seeing, the AI models are getting smarter. And it's how we apply it into solving daily problems. And I think there is a good chance that because of the way the economy is being set up, they're young, English-speaking, largely plugged into the global economy, they could be a very powerful force to be reckoned with.
Yes, please.
Hi, I'm Benjamin. This question is mainly for Mr. Teo. Mr. Teo, I'm also a big fan of Asia fixed income, and just like Maureen, I'm usually doing it in dollar denominated, not much of local currency. I feel Asia fixed income is a huge opportunity, but I need some help. I need some help because I'm trying to build a case for Asia fixed income to individual investors like myself? Okay, because individual investors, we are more keen in yield, more keen in, absolute returns. We don't really look at benchmarks like Jackie or, default rates. Okay, and one of the feelings I get is, hey, why not just invest in US bonds instead? Because they have higher yield, they have manageable volatility and drawdown. So maybe you can help me build this case, if you may.
Thank you, Benjamin. Great question. I think about this often. So let's take a step back. I can speak for hours on this. So first, it's not about bonds or equities. And the most important thing is your risk-reward tolerance, right? Over the past, since 2006, right? Even in Singapore, you've had various issues in Singapore and Hong Kong. People talk about, very safe one lah, it's okay, all that mis-selling, right? This is terrible. It sets our financial sector development back 20, 30 years, right? Because you have people who are greedy, you have people who want something for nothing, you have people who do not think about their risk tolerance. So even now, if you look at individual corporate bonds in many countries, right, your spread over government bonds, right, is whatever, 100 basis points. Is that 100 basis points worth it? If you were to buy a Sing Govy right now, you get 2 point something, but you're gonna get that back. Right? You're going to get that back. Can you afford to take the corporate risk, for that 100 basis points or whatever more? I don't know. Only yourself and every individual investor can answer that question. I mean, any conversation in terms of risk reward, it has to be individual because every individual client has their own risk reward tolerance. And we have seen in the past decades, as I mentioned, investors being too greedy, right? They see, you get whatever 4, 5, 6, 7%, and they think, it's very safe, it's whatever. People tell them it's safe, but is it really? Right? And one way to get returns is to either extend duration, right? Go down the capital structure, or just go bananas and go and buy, unrated and or super unrated or single B rated bonds. Is that necessarily the way to go? Because it looks good on paper, but we know that these things, it comes with a level of risk. Are individual investors equipped to handle that level of risk? I don't know, because every investor is different, right? Maybe some investors have a very strong understanding of corporates, individual corporate structure. They know their repayment schedule. They know the management very well. They know the kind of, projects that they're going to do in the next 3 to 4 years. They can see, they think maybe this company is going to raise capital to build like 3 resorts in Vietnam or whatever, and they're going to see, this cash is coming back, right? That's a strong operation environment, blah, blah, blah. Okay, right? Instead of getting 3%, I get 4%, that's worth it. But that has to be done at individual level, right? You can't just, or rather investors can't just close their eyes and jump in and buy a corporate bond just because it has 3 to 4%. And the worst thing that any investor can do when buying such things is, I bought this bond because I heard of the company before. That's terrible. You've heard of a company before, but we've seen so many individual cases over the past few years where individual bondholders get wiped out because they did not do their research. They did not. It's not a question of DYOR, but this is, you really have to do your own research on the company. You have to be comfortable. Can't just listen to, say, your advisor saying that this is a bond, you're going to get your money back. No, it doesn't work that way. You have to know your own profile very well. And you have to know what exactly you're buying, and you have to be comfortable with either not getting the money back or comfortable with the level of volatility. I mean, and on your question on equities, investors, should you buy equities or not? As I mentioned, it's fine, right? You can buy equities. You have to be aware that, equities can fall in value anytime, right? So at the end of the day, it's about risk reward, right? If you want to make, annualize 7-10% a year, you can't expect to have no losses. You can't have a one-way, rally in markets all the time. But if you are comfortable with and you want your money back, right? You want to get 2-3% a year. You want to, you want to be able to see the money back for retirement after a certain time. Then, again, your risk reward will determine what you buy.
Maybe to dive in a little bit more on the resilience of ASEAN. Some argue that the reason why these countries were resilient is because they come from a very low base and they're not so intertwined with the global economy yet. So Now, of course, things are changing also because of a bit of deglobalization. So we have offshoring from China to some of the countries here. So it becomes more interconnected. But it's also very dependent on good government, right? And we've seen Indonesia and the Philippines now having a more stable leader. Still to be seen for Indonesia with the new regime, but still. How much of an impact does that have on the resilience? The fact that they come from a low base, that there now seems to be more adequate management of these countries. And is that something that can continue? Because it's not to say things are not changing in those countries again.
Yeah, thank you. Again, I think about this from my own personal experience. So having spent 5 years in Hong Kong, and then back to Singapore afterwards, the whole topic of regional financial sector development and resilience sits at the back of my mind. I mean, I look at how economy, city, right, like Hong Kong has developed over time. In the 80s, 90s, right, Hong Kong has been through its own sets of crises, right? I mean, you can argue about whether they came from a high or low base, but there was, oil crisis. There was, again, political developments pre-1990. You had the implementation of the linked exchange rate system in Hong Kong, right, LERS, right, which pegged Hong Kong dollar to the US dollar at where it is right now. Initially, it was 780, and then it moved to a band of 775 to 785. And so that's one example of how an individual economy managed to keep themselves resilient over time, because that's one policy factor to give investors confidence, right? But again, now, as we've seen, once those animal spirits have left, once the level of investor confidence starts to question, then a lot of things need to come into mind, right? Is it sustainable, right? Will there be room to grow? Will they be able to be resilient? I mean, I have no doubt that Hong Kong will be resilient, right? They've weathered crises over time. And then that brings me to Singapore and in the region. I mean, we started from a low base as well, right, in the 60s. A lot of policy that was created through various agencies. I mean, even MES itself was formed from, say, other agencies, BCCS, right, other arms of the government, and then they created MES. And so every country's experience is different. If a country starts from a low base, then that potentially gives them a chance to learn and build from best practices from other countries. But just because the base is now higher, it doesn't mean that the job is done. In fact, I would argue it makes it a lot harder, because then there's more scrutiny. Investors will want more. You have more to live up to because you now have a track record, right? You have to defend it. You can't just make it up as you go along, and you can't change governments every 4 years and decide to spend your way, to growth. I mean, people now have standards. So I actually argue by having a higher base now, it enhances resilience over time, because now investors want to see what more you can achieve.
Yes, Professor Tan.
Hi, good morning. Thank you. My name is Swee Liang. I'm an ESS Council member and a faculty from School of Economics. I'm kind of putting together what Minister Chan says about continuous education, and James, what you talk about, demographic aging society, and Jinke, you spoke about resilient. So the retirement age, for example, in Singapore is 65. And chances are that people are going to live, to about 80, 90. So the resilience I have in mind is, as an individual, how we can be financially resilient. So, if you have somebody who is just like graduating, what advice would you give them in terms of building their portfolio, for example? Minister Chan talked about, it's not about protecting job, but it's about reskilling, upskilling yourself. So as an individual, you'll be working till about 65, right? So thereafter, how do you then build your passive income? So resilience in terms of an individual. So maybe could I get your insights? And it's not like a financial advice, etc. But for someone, like the students that we teach, right? Majority of it, like James, you spoke about speaking to your nephew, nieces, and they're 12, 13 years old. And I think it's just amazing, right? That at that age, they're already thinking about opportunities that, because the income that you earn, right? You worked from 20 to about 60 so, right? That's your active income. But from passive income wise, right? And it's great that they're starting at this age. So I guess my question is for both of you. What sort of advice we can give our students so that they can be resilient, you know, amidst all the challenges? I mean, today's SEPF is about challenges, right? Opportunities amongst challenges. Thank you.
Well, I can start first. I think for the young graduates or people who are just starting out to work, I think what will determine your financial future the most, perhaps, is who you marry. So choose that wisely first. Who you marry matters a lot. And try not to make mistakes, because if there are mistakes along the way, very costly. So, okay, number one. Number two, I'm trying to avoid the actual financial advice. Second thing you got to do is to first understand all the rules, CPF rules, HDB rules, how you benefit from it. I think all these matters. So do more research on that, because there are lots of benefits. And the HDB rule relates to who you marry to, right? So those are very important things. Get the HDB flat. And ultimately, it's how do you, move up that whole, increase your aspiration as you grow older. Because when you get married, you want to get a HDB flat. But in order to do that, you've got to save first, right? So basically, you earn X amount, you need to save X amount. So you need to work backwards to say, I need to save this much down payment, I'm going to take up a loan, what's my kind of cash flow every month, can I afford it? So things like that, you've got to put in place, very basic stuff. And once you have those basic stuff in place, that means I'm going to get a house at this age, and perhaps by that age, I want to upgrade. So you put out those things in place, and whatever excess that you have, that's the amount that you invest. So I think that's how you should start. And of course, always, if you're younger, you can always invest into things that you should have a higher equity allocation when you're younger, because you can take a bit more risk. As you grow older, the allocation will change. From more equities, you want to go into more income, more fixed income, so that you can have an income stream. So you have to think of it in totality, your life circumstances, the house you have, because usually and typically in Singapore, that's your biggest asset. Work around it, and after that, your investment pool, how would it support you? Can it supplement your income after a certain age? So think of that, try to build that in. And I think the basis or the basic when it comes to investing, to me, is always the starting point. For most people who starts investing, is always to think about it through low cost methods, ETFs, for example. Think of, if you want to gain exposure to equity market, to me, S&P 500 is always the starting point, because it's, in a way, it's very hard to beat the S&P 500. Very few managers can actually beat it, so that's the starting point for your equity exposure. And thereafter, I think that's how you can put in a financial plan. But remember, the most important for young people is who you marry. Really, you can do your research and you find out it's true.
I think first of all, I was Prof. Tan's student, so it's such an immense privilege for Prof to be asking me the question than the other way around. And Prof always asks difficult questions, so it's no surprise. I appreciate that. From a few things in my mind, I think first, in my own opinion, of course, spouse is important, but also the most important investment first is yourself. So for a young person graduating or even deciding which course of study in school, it's important because, again, Singapore's economy, right, not I say now, but dual track economy, as mentioned, right, MTI, MAS, all the different agencies, right, tradables and non-tradable sector. So the tradable sector has seen the bulk of productivity growth, right, over the past few years. Non-tradables, it's been 3-4 years now, and we're trying to increase that level of productivity growth. So different sectors, the skills may or may not be transferable to each, right? I mean, if I'm someone who really enjoys, as an example, running a restaurant, I mean, the skill set is there, but it's a different skill set which may or may not be affected by AI, right? Whereas if I'm someone who loves to do computer-assisted design, or if I'm someone who loves to do graphic design, that is technically tradable, where it falls under services. But can you compete with say, very, very smart programmers from, certain regions in the world, right, Eastern Europe, for example, who are much better at creating code to, draw something, or, can you compete with those guys? So that's something to think about. So I think the most important thing is to invest in yourself, to know what you want, what sector you want to work in. And then from there, you can decide, right? I mean, certain sectors pay more than other sectors. But again, whether they will pay, whether that premium will be justified in 5 to 10 years with AI, who knows, right? Whereas there are some other sectors where, you can have AI, you can have new ways of doing it, or you can, outsource certain jobs overseas. But there are some jobs which can't be outsourced, right? You have to do it. I can't have a robot cooking for me, or maybe you can now, right? But if I want to be a Michelin-starred chef, for example, that can't be outsourced. The demand is inelastic for such a skill set. And that's something which AI may or may not change over the years. So I think, it all boils down to what each the investor, but individual wants. And whether he or she has the ability to work in certain sectors. So it's a very individual outcome. And thank you, Prof.
Thank you. Please, we have several more questions here in the front, too.
Jadi from Singapore Management University. I have questions for both speakers. So the first question is for James. So what's your opinion on, say, the sustainable upper bound of the US debt to GDP ratio? Thinking about, if the interest rate is 5% and the ratio, suppose, is 200%, then, every year, 10% of the GDP goes to the interest. And then, the whole thing can get exponentially fast. It's not that easy to sustain. And the second question is for Mr. Teal. So in that scenario, say in the US, the debt situation become less and less sustainable, become to the point of, say, point of no return. So what's the implication then for the Asian or ASEAN debt market? And in that particular scenario, what is the global risk factors we should take into consideration in that kind of dire situation?
Thanks for the question. Every year, the US government spends about 6 to 7% of the GDP. A lot of their items are actually very sticky. They cannot they can't move around. A lot to do with Medicare, Social Security. So whichever government that takes over, those big items, they just can't avoid. So from that perspective, it's very hard for them to reduce their debt position. Good news is, of course, now the interest rates are falling, so that would relieve some debt burden. But I think by and large, this whole trend of higher fiscal spending, increasing debt position in the US, I think would likely continue. The question is, will there come a point where because they are issuing the debt, will a buyer of the debt starts to question and say your fiscal path is not sustainable? There might be a chance. Remember about a couple of years ago, we had that case, Liz Truss in UK, when the fiscal plan was not essentially, when her fiscal plan was not kind of agreed by the markets, and the markets voted. They increased interest rates, they sell off the bonds, they sell off UK gilts. And that essentially Liz Truss lost a job, not because her party voted her out, but the markets essentially voted her out. So she was out as Prime Minister over the shortest period of time. And then the markets wanted a more credible fiscal plan. Can this situation happen in the US? I think it's plausible. But I think it takes a lot more, because the fact of the matter is that almost 60% of the reserve currency in the world is still largely US dollars. The next closest probably is Euro, 20-30%. RMB is around 3-4%. So the problem is that there isn't the market is become too big to fail, in a sense, or the system has become too large. There isn't a better system to switch into. But come a time where there is a bigger market to switch into, there is a bigger enough alternative, yeah, then I think we might see more pressure on the sustainability of US debt. But as of now, without that, that competition, if you will, I think at least for the next 1-2 years, this whole issue of US debt will continue. Yes, there will be times where bond yields in the US will increase, but I don't think that you'll reach a point where the markets would kind of vote and sell out every US Treasury, because there's just nowhere else to go as a result. So yeah, I think it is a big risk, but something that will play out over many years until a big alternative is actually found. Thanks for the question.
Yeah, and thank you again for your question. So this is something which I can try to answer as a lay observer of the Singapore market, right? As a normal citizen. I think resilience is something which Singapore as a whole, right? So public service, government, right? Party of the day, whatever. Think about, because if your scenario as you outlined really happens, it's going to be back to every man or woman for himself as a country. I think the very foundations of what states are, right? The very foundation of what's an economy, what's a country, will be put into question. If countries realize that that's an extreme scenario, but it's very real, right? I mean, there's no guarantee that any country will be around in 50, 100 years. But yet, in Singapore, we have to assume that we're going to be around. We fight for survival as a country every single day, right? That that we'll be here to stay, right? Why else would anyone buy 50-year, or 30-year Singapore government bond? Because they trust us, because they trust that the country will still be around. So the moment this trust is gone, the moment you start to again go bananas and raise debt, or maybe you have no choice but to increase your deficits, that's when this starts to get questioned, right? People don't trust you anymore, and when you can't trust the trust, once it's gone, it's very, very difficult to build it, right? You spend a whole lifetime building this trust, and in 2 seconds with an announcement, it's gone. And on this topic, what can possibly cause this deficit to increase? I mean, in Singapore, we have seen how our economy has grown, changed, and evolved over time. Back then, when when the deep water port was one of our most significant assets, our forefathers had the foresight to see and to think and to plan, right? You privatize PSA, right? You buy up stakes in ports around the world, right? If you look at PSA's website, you will see that they have different operations around the world. You sell your expertise to ports, right? So if the day really comes when something happens and you lose the advantage, then it's 6% of GDP. Tough, but not something which can't be overcome, right? And we are seeing this in other countries in the Middle East as well, right? Your UAEs of the world realize that they're not going to be around forever in terms of the resource. Something can change, right? Maybe today they have a natural resource that people like, whether it's oil or LPG. But if new developments, right, be it AI, or maybe one day tomorrow we wake up and we can use, say, water as fuel as an example, then these advantages are gone overnight. So then what happens now? Right? That's when they start leaning on the resilience they built, over the past decades. And then you have to trust that this resilience will continue. Thank you.
One more question here in the front.
Hi, thank you all for the insightful sharing on world economy and how interest rates are driving the world economic situation. I like what Minister Chan Chun Sing said earlier about the calculator being deterministic and AI being probabilistic. Actually, the world economy is even more probabilistic and more volatile and more uncertain, more ambiguous these days. So that would imply that our talent will have to become, to have competitive advantage, the ability to navigate the VUCA world and to be able to solve problems better than anybody else, like what we've done in the past decades. But as the past is no guarantee of the future, what do you think Singapore with a small economy and aging population? I mean, Minister alluded to a few things, but I wanted to hear from your thoughts. What do you think should be the key driver for the younger generation to be able to survive the VUCA world and maintain our competitive advantage?
Wow, that's a great one. Oh man. Don't really know how to answer it directly because it's because when the question, I mean, I ponder it for my own kids as well. Whether can they survive in this more volatile world? And in fact, just over last week, I was in Bangkok and I was speaking to young people, young businessmen, young entrepreneurs, people who just started working. I'm actually very impressed. First, the proficiency of their English language is very good. In some way better than Singapore. Because, you know, our language is very colloquial sometimes. So they speak good international English. And some of them, they can speak good Mandarin. Like, wow, I was very impressed. And of course, they can speak Thai. So just on the language proficiency itself, wow, we are losing out. But maybe I have a small selected sample bias, but I can see that even people in the region, they're catching up very, very fast. They're becoming smarter. What you can learn, they know it as well. So how does Singapore continue to hold that advantage? I mean, we have certain advantages, the institutions, the rule of law, our education system, our universities, we hold on to it. But how do we create that additional edge? And I think I would answer in the same line as how Minister talked about. Use AI, make ourselves smarter than the AI, you know. I think that's the way. Certain things AI can't do and AI will never be able to do. It's connection. It's things like being able to convey an idea. And in some ways, you know, if you think about it in business or in anything, it's always what makes a company successful. There are many elements. You know, we learn I learned in school, you know, the 4 Ps: price, promotion, place, distribution, product. But ultimately, what ties together is actually the brand. I think that's very powerful. How do you create a brand and a brand equity that people can trust in you? I think we have to continue to build that brand, that Singapore brand, that we show we have a certain quality, we have a certain strength in our people, that we're smart enough. I think we can lose, that brand can lose its edge over time, but I think we got to work hard at it. Product itself matters, but not totally. To me, brand matters more, and ultimately distribution. Just think of Starbucks, for example. The coffee so-so, right? Yeah, everyone agrees, so-so. Product so-so, but distribution very powerful, brand very good. It's everywhere. So I think at the end, you need to get a few elements right. If you just compete solely on one area, you stress yourself out. It's just like students. You want to compete on GPA, everyone, or you stress yourself out. But if you combine different elements and combine it and have a certain brand, I think we can be quite successful with our existing strength. So that's my answer to it. Very difficult question.
Yeah, thank you. So in Singapore, again, if we have the great fortune to either be born here or to grow up here, then the trade-off is that you have to work, right? You have to have and as ministers here, we have the opportunity to improve and increase our skills. Unfortunately, Singapore is not like, say, the other countries where you have a large amount of, huge amount of, say, benefit packages or whatever. I mean, and that was never the case, right? In Singapore, as long as you're willing to work, you're willing to put in the effort, the state will always be there to help you increase and grow your skills. And on the whole topic of skills and how younger students can benefit, there is no substitute for creating good work and product. Doesn't matter what we do, right? Whether it's creating a widget or delivering a service for multinationals. For here, there's no substitute for delivering a high quality of product, right? Whatever the price is paid for us. And I think that's one hallmark of Singapore. We generally give good deliverables, right? If companies put money in Singapore and set up shop here, right? Spend money to train and grow. Whether it was Texas Instruments or Seagate in the 80s and 90s, or today you have vaccine companies, financial companies here in Singapore. They invest in us because we give good product. We have certainty. You can get your money. You know that you're going to get, a certain level of quality. And I think that can never end. We must always be able to deliver a good product.
Thank you. We have to end right now because I think lunch is being served. Thank you for all these insightful questions. And if I look at, if I conclude both of your presentations, the 3 Ds are actually boding very well for our region. We have the demographic dividend, we're low on debt, and we have deglobalization work for us because of reshoring to parts in Asia. If I then look at the investment opportunity that you, Chirkin, told us about, the local Asian bonds, we probably can invest in this region and then we'll be safe for our old age. So a very positive note. Please join me in thanking these fabulous speakers.
Thank you, speakers, for the thought-provoking discussion. I must say that I am leaving this discussion feeling a little daunted. As a final year uni student myself, all I'm taking away is to secure my financial resilience, I must find a very, very good partner. So all the best to all of us Year 4s, if there are any here. Okay, so we have come to the end of the morning session of the forum. Lunch will now commence. Guests and speakers kindly proceed to the foyer outside this room for lunch. The afternoon session will commence at 1:30 p.m. Thank you.